Today I want to answer a question that I get a lot. Is the Bay Area housing market crashing or recovering? Well, it really depends on the timeline. To really see what's happening, let's rewind a bit. Between mid-2022 and mid-2023, the Bay Area saw some of the biggest price drops in the country.
Bay Area's housing market is experiencing one of the steepest price drops in the country.
Dublin led the nation with a 15% drop in home prices. That's about a $230,000 decline according to Smart Asset. San Francisco also fell by about 13% in that same time period, based on Compass and Redfin data. And Oakland dropped around 12%, with the average price landing near $814,000. Fast forward to 2025, Redfin shows Dublin's prices have bounced back and are now slightly higher than a year ago. San Francisco has stabilized, even showing small gains. But Oakland is still sliding, with the median prices closer to $760,000 today. So what does that mean if you're buying or selling right now? Let's break it down. If you tried to buy a home during the pandemic, you remember what it felt like. Open houses with lines outside the door, homes getting 20 offers in 2 days, and buyers writing desperate love letters just to stand out.
Let it be me. Let it be me.
That market pushed a lot of people to the sidelines. But here's the shift today. The average Bay Area home sits for 58 days, the slowest pace in 5 years. Which means instead of rushing, buyers finally have the time to think, compare, and most importantly, negotiate. And this isn't just a Bay Area story. The whole housing market is shifting. Nationally, more homes are starting to move again. In July, existing home sales ticked up 2%, hitting just over 4 million at an annual pace. But here's the key. Even with that bump, prices are basically flat. The median US home price is about $422,000, only 0.2% higher than last year. That's the smallest increase we've seen in more than 2 years. At the same time, inventory is building up. Right now, there are about 1.55 million homes on the market nationwide, the highest level since early 2020. And as the National Association of Realtors chief economist puts it, wage growth is now outpacing home price increases, and that's giving buyers more room to negotiate. While the national market is showing signs of balance, the Bay Area tells a more complicated story. Yes, we've seen Dublin bounce back, San Francisco stabilize, and Oakland slip further. But the real takeaway is this: the Bay Area isn't just one single market. It's dozens of micro markets, each with its own rhythm. Take Oakland's Rockridge neighborhood, for example. Updated homes are still sparking multiple offers. But go down just a few blocks and a similar size house might sit for weeks and sell under asking. Fremont still remains one of the priciest East Bay cities, often well above the $1 million mark. Meanwhile, Concord and Vallejo look very different, offering more affordability and pulling in first-time buyers priced out of the core Bay Area market. The lesson here is this: real estate in the Bay Area is hyper-local. One zip code can feel like a buyer's market, while the next zip code feels like a seller's market. Even with prices cooling in some areas, affordability is still the biggest challenge for Bay Area home buyers. Homes here are still often priced in the millions, while incomes just haven't kept up.
That's the problem.
That gap is what makes the math so tough. Let me give you a quick example. On a $1 million mortgage at 6.5%, the monthly payment is around $6,320. At 5.5%, it drops to about $5,680. That's a difference of roughly $640 a month. Now let me ask you, would $640 a month change your decision to buy? For most families, it absolutely does. Some buyers are getting creative. They're looking at rate buydowns or even adjustable rate mortgages just to get their foot in the door. And many are betting they can refinance later once rates come back down. A lot of people are banking on the Fed cutting rates to save them. And yes, the Fed just signaled that a 25 basis point could be coming as early as September. But here's the catch. Even the Feds are hinting that this could be a one and done move, not the start of a big cycle of rate cuts.
What does it mean?
That means we could see rates dip slightly and then stall right where they are. And we've seen this before. Back in late 2021, experts predicted rates wouldn't climb much higher. Some even said that they would fall. Instead, what happened? They doubled. So building your entire home buying strategy around the hope of falling rates is risky at best. I had a young couple around that time, first-time buyers. They were so excited to finally get a home. They did everything right. 20% down payment, solid reserves, the picture perfect buyers. They were approved, but the monthly payment really stretched them thin. They told me, "It's okay, Mac. We'll just refinance when rates come back down." But those rates never did. They actually went the opposite way. They went up. And suddenly, what felt manageable at the start turned into a financial strain. That was back in 2021. The rate they got was 5.5%. Since then, we haven't seen rates come anywhere close to that number. That's why I always tell clients refinancing should only be looked at as a bonus, but it should never be the plan you build your entire purchase around. Hey, if you're thinking about buying or even just exploring the possibility, send me a message and we'll schedule a quick Zoom call. We'll go over your numbers, your options, and see if now makes sense for you. Okay, we talked about the buyers, but how about the sellers? Here's how it's playing out in real life for sellers. I had a listing where the neighborhood hadn't seen a single sale in almost 2 years. The last sold property happened to be the same exact model as my seller's home. Their house was clearly better. Better location, better upgrades, bigger lot, corner lot. On paper, it deserved more. But the market was flat. Hardly anything was moving. And on top of that, their home was priced about double the city's median, which already meant a smaller pool of buyers. During our consultation, the sellers wanted to list higher than the old comparable. I told them with no recent activity, a slowing market, and fewer qualified buyers, pricing above that old comparable could backfire. So they agreed and we listed it at the same price as the 2-year-old sale. The home was well received, packed open houses for 2 straight weekends. Honestly, I thought we'd get at least 2 offers right away. But guess what? 0. We got 0 offers. It took 3 more weeks of prodding, probing, and negotiating before we finally got 2 serious buyers. And both offers came in below where we priced it. Everyone loved the house, but no one was willing to step up. That's the reality sellers need to understand today. Buyers are choosy. They're comparing homes carefully, and they're willing to walk away if it doesn't feel right. That means sellers need to lean into presentation, staging, photography, marketing, and most importantly, pricing. Get any of those wrong and it means longer marketing times. Well, the good news, serious buyers are still out there, and homes that are priced and prepared correctly are still selling, often close to asking, some even above. So now here's the good news for buyers. This slower pace in the market actually creates opportunity. Homes are sitting longer, which means less competition. Bidding wars aren't nearly as common, and that gives you, the buyer, more leverage to negotiate. You've got more choices, more time, and less stress than we've seen in years. And nationally, inventory is at its highest level since early 2020. That means whether you're buying here in the Bay Area or anywhere else, you're shopping with more options on the table. And always remember, real estate is local. In overbuilt markets like Texas and Florida, prices are sliding because supply keeps coming online. But here in California, it's the opposite. Building is still tough, supply is limited, and that puts a floor under prices in many Bay Area neighborhoods. So if the chaos of the pandemic market push you to the sidelines, this might be your green light to jump back in. Hey, by the way, if you find this helpful, hit that like button and subscribe. I post regular updates on the Bay Area housing market. In this way, you'll always stay a step ahead. And so we come back to the question, is the Bay Area housing market crashing or recovering? The truth is,
It's not that simple.
some areas are correcting, others are stabilizing, and a few are already bouncing back. That's why having the right guidance matters more than ever. Do you think the Bay Area market is finally becoming more affordable, or is it still out of reach for most buyers? Drop your thoughts in the comments below. I'm Mac Rogers. I keep tabs on the Bay Area real estate market and neighborhood trends so you don't have to. Thanks for watching.